So as trade fears seem to be getting pushed aside, investors set their sights on earnings. Is this another sign that the rally still has legs? Let's bring in Nancy Tengler. She's Chief Investment Officer with Heartland Financial, and Barry James, President and Portfolio Manager with James Investment Research. So Barry, I want to start with you. I don't know if you were able to hear all of the discussion here with Steve Leisman, but are you afraid of what the yield curve is telling us, or do you think this is not something we should be afraid of, like we were last time, as Steve says that the Fed is watching but not scared of?
What we see is the market does react to monetary issues. It's more the quantitative tightening than I think the Fed raising interest rates. Our study showed you get a little bit lower returns when the Fed's raising rates, but it doesn't wipe them out. Quantitative tightening, if it does the opposite of quantitative easing, however, is scary. And we've got a really strange market. I'm calling it the strawberry shortcake diet. I know that's a weird name, but we're seeing things go crazy. 10 names this year account for more than 100% of the return in the S&P. The other 490 names lost money, and we're seeing value stocks underperforming the growth stocks, good earnings underperforming bad earnings, and previously strong performers underperforming the weak performers. So everything's upside down. But what that means in this diet, you got diabetes, you got to change your diet. And it's going to be small and going to be value. And that's coming up, we think, in the second half of the year. That's
interesting. And Nancy, it sounds like you're changing your diet a little bit, too, because even though we've seen these FANG names responsible for 70% of the market's gains this year, you're selling out of those. You think you need to change up what your portfolio looks like?
Yeah, we're selling. We're not out, but we are selling. Okay. So as a relative value manager, I'm interested in selling to growth stock investors when they're greedy, and they seem to be pretty greedy in those names right now. So we have been selling and redeploying in places where we find opportunity that are also in the value space, which I'm sorry, the other guest there, yeah. Thank you. To Barry's point, it's not just what he described, but also on a valuation basis, low PE stocks have underperformed high PE stocks, high yield stocks have underperformed low yield stocks, and so on.
Where are you finding the value? What corners and what names?
In names. So, I mean, individual names more than sectors. We still like some of the old technology companies that we've been buying.
Old technology companies would be what?
Microsoft, although they would argue otherwise. Cisco, Intel. We've been adding to some of those names. Apple is a name we still hold and we still like very much, even though we were pounding the table 2 years ago. But also names like Home Depot, FedEx. We actually added a little to Boeing recently on the weakness. So we're in pretty broadly diversified.
Why do you think now is the time to rotate out of some of these higher flyers in terms of the tech names? I mean, that argument could have been made a few months ago as well. And then David Einhorn shorted a basket of FANG Plus stocks because he was so convinced that the time was near where these stocks would turn around and go lower. So why now, Nancy?
Well, for us, it's valuation, but we still own Facebook and Google and Apple. We don't own Netflix or Amazon, but we own less of them than we did. They were our largest holdings. Now we own we run pretty concentrated portfolios. We're in 3.5% to 4%, where they were 5% and 5.5%. But we're finding better relative valuations. And then there's the whole regression to the mean argument. Someday, value will outperform again. This is one of the longest periods since the Great Depression where growth has outperformed value.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.